What's going on, guys? Brian's here. Today is Tuesday, November 30th, 2021, and the market is closed. Now, you guys know I've been coding a lot the last few weeks, and I've been implementing a lot of new features to the premium members for the Discord, so this is what this video is really talking to. But before we swipe over to the Discord and go over some of the key changes that's been happening, I just wanted to point out the current price action right now. We can see is extremely bloody day in the market again, but I'm coming in tomorrow looking for some bullish setups, and I'm going to show you guys why in a second. So as I swipe over to the Discord, you guys have noticed obviously at this point there's been the data streams as well as the bot requests and the QTA automatic alerts that's been new as of the past couple weeks. Now this right here is something we're testing out for the time being. Now a major driving point for Quant trading app is to make trading as simple as possible, but to also provide high quality trades or high probability setups. However, every system of trading needs some sort of confluence, and for the next 6 months my intention was to develop a lot more to the algorithm to actually give us some sort of confluence using options flow. So that's why I've added, right now we're just testing out Quant's data and Tradytics, as I believe it's called, just to see which service provides a little bit more of a better information. I'm leaning towards one side for now, but we're going to get into that for a second. For starters, I'm separating this from the gold members because it can be a little bit overwhelming while the market is open to be getting so many notifications. So if you didn't know, you can just right click on the channel itself. If you're not interested in it, you can collapse it, but if you are interested but it's just taking up too much noise and your phone's going off too much, just make sure you come down here and you can actually mute the entire category until you turn it back on, so that way it will still pop up here. So if any type of golden sweep or any type of quant data alert shows up, any type of unusual options activity shows up, you'll always be able to click right here and pull it up and see what's going on, but that way it won't keep making that noise and you can still keep this section open. So I'm looking to get a little bit of feedback from you guys. If there's certain sections, I know the gold chat is where most of us are during the day, if you guys want that to be in its own separate channel, so that way you don't have to worry about muting it at all, but you want to have some of the other channels muted, or maybe I'll make a category just for sort of the automatic alerts, so even the QTA alerts if it seems to be a little bit overwhelming, because again this is new and the Discord did not have this much alerts going off all day long. So if it's a little bit overwhelming, I'm sorry for that, and it's not the intention behind the Discord, but I want to show you guys how I'm using a lot of this information right now, and something that I actually discovered today. It's going to make it even easier for how we can use this for Confluence. Now I also want to mention I'm not the type of trader that previously used any type of options flow or any type of following golden sweeps and all that stuff. It's not my area of expertise. However, I understand its importance because we took a really good swing trade a couple weeks back, but the rest of the world knew there was a bunch of call sweeps coming into Apple, and seeing that was something that I considered would have been Confluence for what we were already seeing in Apple, and it could have been something to use to gauge if we should add more size to our swing trade, because we all know what happened to Apple. It went from 148 from our entry all the way up to like 165 in a week and a half time, which is a huge move for a company of Apple's size. So following that was the main catalyst for I was like, okay, we need to have something like this in if the rest of the world is able to see this. However, as the market is open, seeing all these types of automatic alerts coming in is a little bit overwhelming. So we can look at this right here. The way I started looking at it is like, if it's red, obviously it means it's bearish, and then if we keep scrolling right here, let's see, this would mean that it's bullish. But however, if there are bullish sweeps coming in on the VIX, that's not a good thing, and there's bearish sweeps coming in on the SPX and the IWM. This right here means that right now the sweeps that are coming in overall are bearish. So these are coming in live, and there's a lot of them coming in. So that's one way to take note of that, or you can just completely ignore this and maybe pay attention to the golden sweeps. The golden sweeps are going to be ones that it should be, I believe, over $1 million in premium, if I remember correctly. I think that's how it's separated. So it's a accumulation of all the other sweeps, and then it's added up, and then it's notified to us right here. So it doesn't have the red or green on this, because if it's golden, it's just because the premium. Now, if you're going to be trying to read some of this on your own, you would actually have to come in here and say like, okay, what's being traded? Okay, it's a golden sweep on the IWM. It means the premium is over $1 million. The contracts traded are puts. These are the strike price. This is the price of the IWM when this sweep came through. This is the sweep here. Where did the trade take place? It happened on the ask. This was the open interest, and this was the volume. So you'd have to come in here and actually read all this, which to me, I think it's a little bit, again, overwhelming. The golden sweeps it's not so bad because there's not too many of them coming in, but for the unusual options activity, this is where it's a bit much. So again, to keep it simple, you can just pay attention to these colors right here. However, to make things even simpler, I'm just going to go over to the bot testing page. This is just something I created just for this video, so I don't bombard you guys right now with alerts. We know that there's a little bit of shortcuts, so we could just type in something like flow, and then we can say SPY, and that will pop up here. Or maybe we can do stats SPY, and it will give us a little bit of a snapshot of how many calls and how many puts were traded today and the overall premium and the overall volume. That's if we're going to continue to use quant data. I haven't decided which one, because again, I'm looking to get a little bit of feedback from you guys, and who knows, maybe ultimately I'll end up keeping both of the other algorithms in there too. I don't mind doing that as long as it's A, not overwhelming, and B, it actually adds some sort of confluence to the quant trading app levels. Now we have the Tradytics alerts in here, so we can use something like flow sum, and then we can say SPY. So this right here, well, I like this because obviously the visuals is a little bit nicer. Now I'm not sure how these algos are actually aggregating their information, but we just have to have a little bit of faith that they work. We look at this right here. This is saying that there's been majority of puts traded today on the SPY. Majority of the puts traded were out the money puts, and as we look at this here, we can see that most of them were being sold. So if there's a lot of puts being sold, that's actually bullish. So let's just say this is here, right? This would, assuming this is 75% of all the options traded today are puts. It's not 75, but I'm just going to keep it simple. And then assuming this yellow was all the way up to here, so this would mean that there's 75 of all the puts traded were out the money options. And again, this is my interpretation of how I'm analyzing this information. And then we can say over here, it's most of them are being sold. So let's just say this was 50%. So 50%, or we'll say 60%. So it's a little bit more than half. This right here, to me, I'm going to interpret it as being a little bit of bullish, even though it's going to appear when you first look at it as pretty bearish. Now, we have an even simpler way of actually analyzing this information, because if you actually type in TR and we put in Algoflow, this is proprietary to Tradytics, and we put in SPY, we can actually see this is going to aggregate all of that information for us, and it's saying that it's giving it a ranking right here of a 3.5. So anything over 0 for the Tradytics algo is considered bullish. So it's showing that there's divergence here between how many calls are being purchased and how many puts are being sold versus where the SPY is actually at, and this divergence would actually be considered to be bullish. So this right here, again, I didn't mention it a couple days ago because I was not aware of this, but now that I am aware of this is how I'm going to be using it even more, because a couple days ago, if we go to the intraday chart right here, you guys know I shorted the Qs to start the week off, but this is the first week in which we're using this type of information. And all I was looking at is this right here. We were at the sell zone and I saw a lot of wick rejections coming in. And at the same time, I was able to see that supply was forming. So I entered a short trade on the NASDAQ futures here, and I took my profit right at VWAP, right? Now at this time, I posted in the chat that the confluence for me was not only were we at the level that I can see in the price action that the wicks were forming, there were rejections forming, which you guys know I like to use as my confirmation around the levels, but there was a lot of unusual options activity coming in, and there was a lot of put flow coming into the market at this time, which is cool for a scalp. But at the same time, you guys know prior to this week, that's not even extra information that I wouldn't have looked for, and I'm not going to miss a trade opportunity like this busy trying to read all of these sweeps coming through. If I see this right here, then I'm going to go and look at what's happening in the order flow. But now we have an even simpler way to actually analyze this. We can just type in the algo flow and see what the Tradytics algo kind of says. And if there's divergence at the time, we can use that as extra confluence, because what's good about this is it's reading order flow and it's reading options flow, which is something that the quant trading app Algo does not currently do right now. But if we combine the two, that can provide tremendous edge, because the thing is, a lot of these other services that provide options flow, they don't tell you where to take the trade. They leave it upon yourself to use some sort of technical analysis. But this is where we know where to take certain trades, because that's what quant trading app provides. If we know we're at one of these levels, we should be looking for some sort of a short setup, as well as we know is if the short setup works and we hit our profit target, but bulls are still strong and we can see that price is still pushing. Once we crack this level, it's just typical previous resistance becomes future support. That's the thought process behind this, as well as anyone that shorted here. If there were a ton of bears that piled in, they have to then close out their positions, initiating some sort of a miniature squeeze. So that's in a sense how we know to trade just typical price action, support and resistance, as well as using the QTA levels. Now, if we jump over to something, so this is a little bit more of like some trade ideas, if anything, or how, again, I intend on using a lot of this information. Here goes the SPY on the left. Here goes the Qs on the right. Dow bottom left, and the VIX on the bottom right. I mentioned already in the Discord today that we have divergence happening. This right here is the lows from Friday, which was the day after Thanksgiving, and we can see that the SPY put in a new low today. So this right here, if we were to just draw an arrow, we can say that this is a downward, a new low put in. If we look at the NASDAQ actually did not put in a new low today. If we look at the Dow put in a new low. And then if we look at the VIX did not put in a new high. If the SPY puts in a new low, the VIX is supposed to put in a new high. Even if it came back up to, call it $29 flat, it didn't make it back up here. And we can see the VIX is already in its sell zone. So this right here, by the way, if you guys are now viewing this or you're viewing this video a couple months down the line or so, this is a lot of volatility. This is by no means normal. The zones are usually not this large. And then at their core, the zones will be large. We can see 2 sigma on the buy end is all the way down here, whereas 2 sigma on the sell end is at the topper end of this zone. So the algo's already pricing in that the market will struggle to go already higher if we got up to here. So this kind of a pullback was in a sense imminent, but it's also about the context of where we came from last week. Last week, this was 2 sigma for the buy for the quant trading app Algo. The market closed at 1 p.m. because it was a half a day. And when we ended up gapping up, essentially hitting the swing target if you swung calls from the SPY last week. But now coming into this week, it was starting to look pretty bearish. And that's why yesterday in the Discord, I kept mentioning at the pre-market, wait to see what happens when we get to the anchored VWAP or if we got to the intraday zone. And we actually just jump over to the Discord and just take a look at that from pre-market, what price action looked like. It was right here. So I'm trying to make sure I keep the futures tab pretty clean, but again, I'm not sure how many of you guys actually are trading this, because I know most of you are in the gold chat, and if I'm not getting any reactions on here, again, I'm not sure how many of you guys actually look at this. But from pre-market, this is in a sense where I start. So mentioned, the same levels, just been keeping you guys up to date with it. But then I said and today the game plan being right here. So this was yesterday's shorts, but at the same time, the market was right in between here, and there's not enough of an edge when we're right in between the two zones. So I just mentioned, just wait to see how price reacts at the POCs, and the POCs being this one right here. Here was yesterday's point of control, and this was the pre-market point of control. So pretty much this is where price currently was. So we're kind of in between these two. There's not enough of an edge to trade at the open here. You have better chances just waiting to take a trade either short here or long here, or taking a trade at the break of this on the retest to here to see if it holds to then push higher. But trading in here is just asking to have no conviction unless there was some sort of catalyst or something like that came out at the open and you had your own reasons to believe it was going to go a little bit higher. Now these futures supply and demand zones, I draw these in manually, but this is the quant trading app levels right here. So if we take a look, this is what happened. We entered the first intraday zone with the 2-day anchor VWAP right there, and the same time that happens is the same time the NASDAQ actually hit its zone. So the confluence of these two hitting the zones at the same time with the anchor VWAP right here was the same time the futures was hitting that point of control. And at the same time, we can see how this short ended up playing out. It went straight down to this level right here. So you're talking about a short from here to down to here on the SPY is a huge move, and if you're trading the futures, it's also a huge move. But again, how can we simplify this and make it very easy on yourself, right? This is where the alerts come into play. So if we come back to the QTA alerts, and let's take, for example, this right here. Let's see the DIA, right? So Dow Jones, we know now we'll get a notification once we hit the buy zone, and then once we hit the weekly support level. So if we come back to here, we can see like the Dow Jones, this alert was sent out today at 12:02, right on time, because it's real-time data. So it's real-time data. So just as it hits the levels, we'll get the notification within 30 seconds or so right after it hits the level. And the first thought you should be having when any of the indexes, so the Dow, the Russell, the NASDAQ, and the SPY hits support or resistance, this is how I'm planning on using it. You hop right over to obviously the bot request, and let's just say you say something like, let's see, what's the Algoflow for the Dow Jones, and we put this in right here. And if we see this is saying it's pretty bearish. So we don't want to be looking for any type of bearish setup. If that's the only confluence you use, then that's great, right? Let's jump to something like this. As we mentioned earlier, there is more strength in tech right now, which means we want to be looking to trade tech. So let's say, what are the tech companies that we might want to trade? Let's go with Facebook right now. How does Facebook look? Let's actually maximize this, and we can see alert goes off right here, and this would be at 10:55 or so. So we come back to the QTA alerts, and let's just scroll and just make sure that one actually went through. As you guys know, I'm patching up some of the bugs right now in here. So I apologize if anything comes through a little bit incorrectly. So here we go. So today at 11 a.m., let me just double check that. So right here at 11 a.m. these are 5-minute candles that we're looking at right here, whereas that's reading 1-minute candles. So right here, we get the notification. Your first step should be like, first of all, the QTA Algo has a strength of 80%, which is already pretty good. So I'm still refining this strength. So I actually added that. Right now it's in beta, so you guys just know. But it's actually, I'm looking to tweak this and make it a little bit more refined. But just know that this is saying that the strength is 80% on QTA. So it actually believes that Facebook is going to bounce. Now, if you want Confluence, and you're thinking about taking either a trade here, or you're looking to potentially swing the trade, as you know, I like to look for the swings, but if I'm going to enter a swing, it might not be this early in the day. I'm maybe enter a small piece of the trade, and then I'm definitely looking to enter my swings during power hour like most of swing traders. Now, the last few minutes of the day, you're looking at this price action, and this is where you come here and let's see what the Tradytics Algoflow is for Facebook. And this pops up and you go, oh wow, okay, so Tradytics has a divergence, and it's saying that the algo score, this is the color right here, and this is the stock price, which is the yellow line. This is a massive divergence. So in other words, this is aggregating all of the call flow and all of the way the puts have been traded. Everything's being aggregated right here, and I really like the fact that the developers made this pretty simple, because for sweeps, to me, that was already, after 1.5 days of trading with that, I was already thinking like, this is too much. And I already got a couple messages from you guys saying how it can easily start to feel like paralysis analysis, because you want to look at everything, but obviously trading is already as exhausting as itself, as we're looking at price action. If you're trading options, you have to look at the options chain and XYZ. But now if we have something like this, and this is the only measure you're looking for, this right here has Facebook. Once I saw this after the market closed, I was like, okay, now Facebook is definitely something I want to keep on watch for tomorrow. Now, if you ask yourself, okay, what to trade, or how do I want to trade Facebook if you're trading options, always start with what's this right here. So we have this, the 340 call is probably going to be a call of interest, or the 335. If we look at the options chain and actually come right here and let's see, usually the quant trading app levels is also where there's going to be high open interest. So we have the 340 right here. So check out the open interest on that strike right here, 340, and then the 335. Look at the open interest and the volume and the open interest on these two right here. So the highest open interest and volume is going to be in the 340. You guys already know, look for those cheap out the money contracts whenever something's in the buy zone, because if it works, it will actually go to at least the weekly midpoint, which will be right here. But now you're talking about the 335 call has the potential to become an at the money call within a day or two. So obviously with theta, if you're trading a weekly option, is going to eat away at you. But assuming this happens in a day, you're talking about at least 100% return on this, because this is one quick way to just measure how much are you going to actually make. If you're trading this and it becomes at the money, what's the current at the money going for? That's just a good gauge for, it's obviously not going to be 100% because there's a ton of other Greeks involved, but that's just one quick way to say like, oh, can I make 100% of this? Which means you buy this, you're making $120, which means maybe you risk $40 or so to make $120, and that's a decent risk reward for an options if you're trading a weekly contract. If you want to trade the way out the money, if the market was a little bit stronger, I would be saying maybe look at the 340, but then you can get maybe 2 or 3 of these, risk 50% of the position. And obviously if this went to at the money, you're talking about a nice return on your capital. But if we swipe this back over here, so now we have it's in the buy zone, which means we're already thinking about some sort of a buy. Obviously, if price comes down here, we know, and it ends up being bought up here, and then within the first hour of the day, it's struggling to get over. So we're talking about like the 10 a.m. reversal or the 10:30 reversal, and Facebook starts selling off, then we can start looking at 2 sigma puts or something like that. So that ends up being the short setup in itself, and that's how we use these levels, because previous demand becomes future supply. Because it means everyone that was purchasing in here is very frustrated that this happened. But then I did also mention whenever we see this type of divergence, and I was saying that the tech is setting up to be pretty bullish tomorrow, the reason being is because looking at the volume profile, we have a little bit of a couple B profiles, and then it's all explained right here. And I did a video exactly on how you can use the 2-day anchored VWAP on days like this. All the volume is at the lows, and that means that the market should go lower tomorrow. However, we can see that there was already divergence in tech and things like that, which means if we gap up over this value area, the 2-day anchored VWAP is also going going to be around here, which means we can risk off of the 2-day anchor VWAP and be targeting some sort of a target like this. Now, unfortunately, the market started squeezing a little bit pre-market, so I already got in and I'm already capitalizing on this, which is why I encourage you guys to open up a futures account, even if it's just with $1,000 or $1,500, $2,000 on the side, because when there's setups like this, we don't know if the market opens all the way up here tomorrow and you missed out on any type of move like this. It ends up, it does suck, because then the opportunities tomorrow won't be as good as what happened during the overnight session. But this is one way in which I already have a game plan for tomorrow. I've already isolated the ticker in which I'm going to choose. Now, if we take a look at another example to wrap up this, if we take a look at Netflix right here, because obviously we would have gotten a notification on Netflix right here. Netflix would have hit the buy zone. So just to confirm, so this was at 1 p.m. If we come back to the QTA alerts and we scroll to right here, 103, Netflix hits support. We can see that its strength is nowhere near as high as Facebook. It's only a 42 from the QTA algo, and we're saying like, okay, so that's not as strong, but let's just see what another algo says. We could type in TR Algoflow and say Netflix, and this is bearish. And immediately, which of these two are we going to want to take? Yes, they're both in the buy zone, but wouldn't Facebook be the one you should probably focus on for tomorrow? Now, there's a bunch of other commands that some of you guys already started using. So you can just put in, I think it's flow sum, and then you can also do something like Netflix like this. And this will print out the data like this, which is cool. This is saying majority of the contracts traded today were puts. Majority of them were out the money, and majority of them were purchased. So this right here, you can look at this and try to figure this out, which is neat. I'm still planning on using this, but if a ton of out the money puts are being purchased, that means obviously the options market is bearish on Netflix. So if we're looking at this type of price action, now you guys can see, this is not only a trade not to buy calls in, but maybe it's a trade to get puts, because we could probably hit 2 sigma. It's not going to be shocking if Netflix hit 2 sigma on the put side, or 2 sigma support, which if you're a short would be your profit target for the bears. So out of curiosity, I do want to take a look at that Netflix put just to see how it's already performing. From the time we would have gotten the QTA alert, it would have been consolidating here for, I don't know how long that is, 30 minutes, an hour or so. And let's take a look at the 635 put. Pull this up on a chart. Actually, the open interest is on this one. So let's go a little bit further out the money and let's take a look. So what time did we say we got the QTA alert? It was at 1 p.m. So assuming right around here, you get the alert, but then it takes you, how long would this be from here to here? So 15 minutes to figure out what you want to do. And then you decide to take this trade. You're talking about a $2.80 contract going to 5. Not a bad way to wrap up today if that happened. If it didn't, stop loss, give it 50 cent stop loss or so. So 2 contracts, it's only $100 risk, with the potential to make a little bit more. But you guys see how the introduction to a lot of this does not have to be super complicated. At least it's not the way I'm planning on using it. The whole intent behind a lot of this is to make things as simple as possible. Whenever we get one of the QTA alerts, it means it hits a level, and it means we should be investigating it, taking a look to see what happens, especially if it's around one of the indexes. And if it's not a ticket you don't intend on trading, like Goldman Sachs, I don't think I've ever traded Goldman Sachs in my life. If it pops there, the MJ, which is the weed ETF, might not ever take a look at that. But Netflix is something that I like trading. I like trading FANG. So Facebook and Netflix is why I'm definitely going to take a look at these two. But now I have an easy way to try to look for some sort of confluence, and then I'll go on the options chain and then decide if it's just trade to take or not. Keep it simple for yourself, guys. And if anything, the priority you really want to be doing is focusing on how do you manage your risk and what's your exit strategy, when are you going to scale out, when you're going to take profits. That's more so what you should be focusing, and not getting too lost or overwhelmed by all of this data coming through right here. So let me know if you have any questions, and I would love to hear a little bit more of the feedback for you guys. to figure out how I can, really make it even easier. I think right now the alerts has me super excited because it means I don't have to stare at all these tickers anymore. And by the time something hits an alert, my mind is a lot more fresh. Whereas I used to be looking at like 20 charts at the same time, just trying to see when something hits a level. And then usually by the time it hit the level, I'm all burnt out from staring at stuff that I couldn't even think that clear to figure out what type of trade I want to take. So I'm actually recording this snippet after I finished recording the initial video. I realized I missed, or I forgot to point something out to you guys. If I type in Algoflow for the SPY, by default, everything's set for just today. So if we want a little bit more information, you can go all the way up to 5, I believe. So if we type SPY and then I press just the number 5 at the end, it's going to show us the past 5 days of price action. So we see there's this right here. This was the half a day. Then there's this right here and right here. So that's the 1, 2, 3, 4, 5 days. And we can see yesterday that this is where the SPY was, but yet the Algoflow was lower, so we ended up selling off a little bit today. And now that we're down here, we can see that the Algoflow was pretty bullish and so forth. So that's one way you can jump back, and then let's just test it out right now. Algoflow SPY, and if I say 2, we can see this price action just zoomed in a little bit closer, and then this would be right here is the split, the difference, and that's pretty convenient. Now, like most of these things, nothing is 100% accurate, just to let you guys know that. So if we go to Algoflow and maybe DIA, and then I put in 5, the Dow has been pretty bearish the whole time, but I think if you play around with it, we could check out a few other tickers. Let's go to QQQ and then put it on 5. We'll see that it's showing that it's bearish. And let's put TR Algoflow QQQ just for today by default. And we can see it's also bearish. But as we looked at our divergences already, we just bring this back out right here, we already know that there's bullish divergence right now just off of price action. So you don't want to completely abandon everything you know and just rely on one algo. The same thing with Quant Trading app, as I've always mentioned. It's about being able to piece certain data points together, looking for confluence, looking for divergence. That's in a sense our job, but how do we make it as simple as possible? And it's just only take trades whenever we get these alerts at these levels here. This is where we have our greatest edges as traders if you're using the Quant Trading app levels. And with the Quant Trading app levels in combination with some sort of flow algo like this, I think this was the last piece in which QTA was missing. I think we're going to set ourselves up for some amazing trades to come. I just wanted to point that out. And then again, the way we should be thinking about this is QTA will tell us where to take the trades, and Flow Algo can tell us how much size to put on the trades or to use as Confluence to decide whether we want to take one trade versus another. But now you don't essentially have to look at anything, and it's just, as soon as we get an alert, pull it up, come to the bot request, and just post whatever you want to post in here. And a list of the commands I'll post somewhere within the Discord, so that way you can always come back to see what it is, or just scroll up and see what everyone else is doing. So hopefully this brought some clarity, and I'm looking forward to hearing from you guys in the Discord. Take care.